Have you ever wondered what you will do when you become a millionaire? How will you deal with all of this money suddenly? Yes, you may not be there yet, but the day will come, trust me. But anyways, only the smart people will think about it, and I will share with you my plan on how to deal with this $1 million. Hi, it's Jia Xuan here, your money guide in GoodWhale. I started my money journey from savings to investing, and along the way, I started to share in the field of personal finance and investing. Now, I'm a licensed financial advisor to guide more people like you to become better money managers. There's many ways you can become a millionaire, either from hard-earned savings to investing, or it could be from your lucky win from the lottery, or it could be from your inheritance from your parents that love you so much that they left you a sum of money from their insurance and their investments over time. Whatever it is, when the day comes, you don't want to be unprepared. Here's why. Money that comes easy goes easy as well. You may know him as the host of Asia's One's The Current State. Do you know Edward Choy? He's an actor as well as a host. He nearly lost $100,000 of his inheritance from his grandfather. That's a lot of money. So how did he lose it? Easy. He treated investing as gambling. So he went to high risk investments thinking that, hey, high risk, high reward, right? And once you get the profits for the first time from these trades, the highness of it gets you and you start to chase for more and more returns. And that's where it becomes more and more gambling mindset. Luckily, think for him that he only lost $100,000 back then. Can you imagine if he lost $1 million? Oh, that would be so much life-changing and the impact will be so big. So that is why before we even become rich, let's strategize on what to do with it first. I will share with you how I will deal with this, but of course this is just a reference. There's no right or wrong when it comes to dealing with your own money. After all, it's your money. So in this video, I will share with you what I will do if I'm suddenly handed with $1 million. Yay! Okay, but truthfully, the first thing I will do is not to tell anyone. Shh. You know what they say, right? Once people know you're rich, they'll start coming after you. Shh. The truth is that once I'm handled with this $1 million, I think the first thing I will do is probably not do any big changes. Apart from the spike in my bank account, my lifestyle, the way I deal with it, my money spending habit, it shouldn't change at all. I will still remain prudent, frugal. Only when I've done up this plan, which I will be sharing, then I would think about being a bit more luxurious in terms of my lifestyle. So this is what I will do. The first thing I will do is clear up any of these high interest debts. It can come from your credit card, it can come from those high interest loan, maybe from loan sharks. But we are not talking about your property loan. But what's the reason why I want to clear out all of this high interest debt? The reason is simple. These are money leeches that is sucking away your money bit by bit over time. And if you don't pay them off, they will continue to suck money off your bank account. And that is what's making you poor. If you have any high interest debt that you haven't paid off, pay them off. And from there onwards, don't ever borrow money from the credit cards. The interest rate is very high, right? So it can go as high as 20%. They are the first one to go. Now that we have taken out the dead weights from your accounts and your spendings, the next thing I will do is to pump up my emergency funds. So according to the Basic Financial Planning Guide by MES, they suggested 3 to 6 months. But is this actually enough? What happens if in the 6 months time, you are unable to find the next job that replaces the previous income that you're getting? Then what? You'll be using your savings, which is not what you want. In that case, if 6 months is not enough, I would encourage to save up to 1 year if possible, to be on the cautious side for real emergencies. Now that with this $1 million, I think taking a little portion of it up to 1 year's worth is still reasonable. The next thing I will look into is insurance. I would like to revisit whatever coverage I have because I know that at the point of time before this $1 million I'm probably undercovered. And now that I have much more budget, I definitely don't want to skimp on insurance. And also with this new $1 million in my bank account, I have another $1 million worth of reasons to protect this. So how do I actually protect this $1 million? Simple. I will get myself a life insurance that covers $1 to $2 million. So in any case, whatever happens to me, at least I know that my passing means that my family still gets that $1 to $2 million of extra guaranteed returns. And the payments I'm paying over time is confirmed less than $1 million. Not to mention, after I've been in this finance industry, I realized that there's so many tools out there that allows people pay a lesser premium for their insurance, yet having a higher coverage, and it's even for a lifetime. Or there's those that is not for legacy purposes. So that's a real reason why the rich get richer, because they have access to these tools, then they're more open to use these tools to their advantage so that they can get the maximum out of their money's worth. from insurance to properties. So other than covering for my life insurance, I also cover my critical illness as well, because that is one of the major things that is so costly, especially in Singapore. By the way, in the previous video, I shared about hospitalization insurance and whether you should drop it. So do check that out as well. So coming back, since this $1 million that was inherited, it essentially isn't my money to begin with. And that means that I technically don't need it. So when that day comes, the $1 million is in my bank account, I still plan to work, because what am I going to do 24/7 if I still have to do something, right? And if the things I do, such as going holidays, doesn't sustain and support what I want in life, then I don't find meaning in it. So that's why I still plan to work, get an income, and that is what is supporting my original lifestyle. Now that we have gotten the bases covered from our rainy days funds to insurance, let's talk about better money optimization. So the next thing I will do, if back then I'm in my 20s and I'm still renting, right? The number one thing I'll do is to stop renting as soon as possible. I'm not saying that renting is bad, but renting without having your own assets that is supporting or sustaining this rental, that is where it is bad. And in Singapore's context, if you don't have plan to become a digital nomad where you travel around the world, don't have to stick to one place, other than that, you're probably likely to stay in Singapore, or at least I would choose to do it. Go Singapore! And because of that, the natural consideration is to own a property in Singapore yourself. Firstly, you have another asset that is under your name. Number two, you can actually leverage on HDBs or your bank loans to actually buy the property with a down payment, and slowly along the way you finance it. And recently I met up with a property friend and he gave me a better perspective of why I should consider moving into a private property as soon as possible. So if you're interested, do comment below that you're interested as well. And thirdly, by owning your own property, you can ultimately use this asset to your advantage and rent it out and get your passive income. It's your personal ATM. So instead of making your landlord rich, how about you make yourself rich and become your own landlord? Or should I say home lord, because we technically don't own the land. Bruh. That is why the rich rent out and the poor rents. By the way, if you're liking this video so far, do remember to like, subscribe, and follow us for more, as I will be sharing more of these money tips along the way. Okay, back to property. If let's say I'm not renting, but instead I'm already financing my own house, here's what I will do. No, I'm not going to pay off my mortgage. What? The idea is not to reduce interest. The idea is to take the $1 million and get interest out of it. Use interest to pay interest. Smart, right? What I will do is to review my home mortgage to see how much I'm paying per month. And because I've covered my bases from emergency funds to protection, such as insurance, my focus will now then be finding ways to support my expenses. And the big one is actually on the property side. So minimally, I want to see how much cash do I need to park aside in tools that give me passive income, so that I am not so stressed when I am out of a job. For example, if my annual mortgage is $15,000 a year, and if I plan to invest in Singapore bank stocks that give me around 4 to 5%, let's just take the 4% as the conservative dividend yield that I'm expecting to be paid yearly. Oh, by the way, this is a disclaimer not to ask you to buy, sell, or hold any of the securities or the tools that I'm going to mention. This is just for sharing purposes and how I think about how I would approach this $1 million. All right, so back to the example. With the 4% dividend yield that I'm getting from these bank stocks or passive income streams, what it means to say is that I'm going to invest at least $375,000 of my inheritance into these 4% investment tools. It might not be the wisest thing to just rely on this $375,000, because the dividend payout from these companies or tools might fluctuate over time based on the business, based on the economy. As much as investors trust their skills and their luck, as well as the company that they buy into, it's never good to just be complacent and arrogant. And that's why diversification comes in to mitigate all of this risk. But at least if let's say the passive income actually drops, I don't have to fully rely on my active income to support my home loan. And that actually can be stressful for many people. But of course, life has more to offer than just paying our home loan, right? And I do expect myself to experience what the world has to offer. And that means holiday! And so in order to sustain my holiday trips moving forward, I wouldn't want to rely on my active income or my savings, but instead I want to get my holiday scholarship from yours truly from the passive income portfolio. And that's why it is important for us to grow our passive income portfolio over time, so that one day when we stop working, either forcefully being retired or voluntarily, at least the passive income stream can support our lifestyle. And lastly, now that we have covered our bases, our insurance, having a roof over my head that I own, setting aside money for passive income investments, what I would do then is to invest the rest for growth. For me, that means to invest in stocks all the way to properties. But whatever I choose, there are two criteria when it comes to my investments. Number one, the interest or the returns from my investments must be higher than inflation rate. That way, I know that my money is not being corroded or depreciated over time. And that means investment tools like fixed D or even bonds, if their interest rates are not as high as the inflation rate, then to me, it is not a good tool to use. And number two, the criteria is that I must know what am I investing in. Because if I don't know what am I investing in, technically I'm not investing. I'm gambling, and that's not what investing is all about. So at least you need to know how the company makes money and what funds you buy into, how are they giving returns to you as investors. If not, it's really risky. So some people might ask me, do I invest in crypto? To me, because I don't understand this industry or this sector, it is very high risk, and that's why I only put a little portion of it and not put too much of my effort and time into it, unless I'm really interested to find out. On the other hand, if you're investing into stocks, then being mindful of what is happening around the company or the economy matters a lot. So that is why you should join us every Tuesday for our weekly live sharing on Wealth Pulse, where we talk about what is happening in the market for that week. And I'll put the link inside the description below. So this is how I will actually manage this $1 million of inheritance that I get. But what about you? How are you going to spend this $1 million? Comment below so I can find out what is your take on it. As always, if you like this video, do remember to subscribe as well as share this with more of your friends, especially if they want to become millionaire. But if you have other topics you would like me to cover or address, do comment below as well. My name is Jia Xuan, and I will see you in the next video. Bye bye!
GoodWhale's here to change the game. Empower your life, build your dreams, financial freedom.